Hey guys, this is Abe, and welcome to a new video for the weekly outlook for the week of 9/18/2022. We're going to have a pretty important week for us traders, and we'll talk about it here in a minute. But first, let's take a quick look at the earning report calendar. Here, mainly, I'm honestly looking at Costco. FedEx have already revised their guidance, and so we've already had the move on FedEx. I'm not really expecting much to happen on Thursday. However, for Costco, the consensus earnings estimate is about $4.11 per share on revenue of $72.04 billion. And investor sentiment is going into the company's earning release has 65% expecting an earnings beat. Obviously, this is going to happen one day after the FOMC rate decision, which will be on Wednesday. So the market could obviously go either way. So even if they end up beating and the market is going red, I'm not sure that's going to be much help for Costco. The next thing we're going to be looking at over here is the economic calendar, and we start with Tuesday. We have the building permits report that comes out at 8:30 Eastern, so it's about an hour before market open. And obviously, this report here measures the change in the number of permits issued by the government for building new houses. The forecast is showing 1.61 million, which is a drop from the previous month of 1.68 million. Obviously, a reduction is expected, and it's going to be an indication if we actually come in less than the forecasted number, that there's going to be less and less demand for building new houses. And although this is bad, this is what the Feds want to see because a slowdown in the housing market is pretty much going to hit a lot of other sectors in the economy. And with that, they're seeing that their policy is working. You know, you want to see a reduction in the number of houses being built because there's going to be less demand for people buying because it's going to be costing more to borrow and buy houses rather than, building more houses, obviously, and inflation continues. And so they want to see a drop in that number. Now, the most important day is going to be obviously Wednesday, where you have another housing report, which is the existing home sales, and it's showing also a forecast as a drop from the previous month, from 4.8 million to 4.7 million. Now, keep in mind, usually, seasonally, houses, there's going to be a lot more sales in summer. However, again, with the increase of the interest rate, a lot of people are holding off on even selling their homes or even trying to buy a home, waiting maybe for the interest to drop in the next couple of years or less, hopefully. Also, we have crude oil inventories that also happens at 10:30 Eastern. And the big start of the show over here is going to be the FOMC projections and interest rate decision. And that happens at 2 o'clock Eastern. And at 2:30, we will have the FOMC press conference. So this is going to be a very, very important day for all traders and investors. On Thursday, we have the initial jobless claims, and obviously it's showing an increase from the last report as well. Again, this is kind of what the Feds would like to start seeing. And finally, on Friday, we have Powell actually speaking at 2 Eastern. So starting from Wednesday, we're going to expect to see some volatility in the market. So without any further ado, let's go ahead and take a look at the charts over here and see what we're looking at. So to start with on ES, which is what we like to look at here, even when trading SPY, uh, we had a drop over here on starting on the 13th. We had a pretty big drop, and we actually broke some key levels over here, like this 39.90 area, and even dropped all the way down to about 39.50, consolidated for a little bit, and then we dropped back again. Now, one thing to kind of mention over here is that whenever you're looking at the overall chart, you can see that this little wedge that we have over here. Actually, I should have probably changed this one to orange, but let's just keep it as yellow because this is a downtrend channel over here. But anyways, from this area from the mid of June 2022 all the way through to September, we have this little uptrend over, well, not an uptrend, let's just call it a support line that actually was broken this last week. And though it is kind of a warning sign for all bulls to see the break of this line, you still have this support area over here at around 38.30 or so. If that breaks, that's probably going to be a little bit ugly. It could probably drop down to around 37.30 or so. Now, what do we expect to happen here for the week? Because we like to look at levels and we like to trade levels. Personally, I expect since if we look at the weekly candles, we've had two outside weeks over here, and one was green and one was red. And so when you look at it over here, two outside weeks, probably until Wednesday, I wouldn't be surprised to see the price trying to come back and test this area up here upwards of 39.30, 39.40, and even goes up to 39.60. Now, with that, it's going to face another resistance line over here, which is this yellow line. So even if we move to the upside over here, one or two scenarios would happen. We can either reject here and come back to test the low over here, or we can break through it and just continue and test this area up here by Wednesday. So I think the range is going to be very tight up until Wednesday. Personally, I don't think there's going to be any huge moves. I could be wrong and I could be proven wrong, but I personally think it's going to be a tight range until Wednesday. So if you trade SPY, if you take any move one way or the other, secure your profits real quick. Don't try to hold on for a huge move. I honestly don't think it's going to happen until Wednesday, until the FOMC decision has been released. And then, even at that point, you still have the conference at 2:30 that follows the decision that's been released. So there's going to be a lot of volatility in these 30 minutes. And even until Powell starts speaking, that's where we probably start seeing where the market is going to be taking a direction. Right now, the two possibilities that we have. The higher possibility is three-quarter of a point, an increase of three-quarter of a point. And there is a smaller chance, I think it's about 19% or so, for a 1 point increase, which honestly, if they do that, that's going to be probably really heavy on the market as far as, a move to the downside. Um, because I'm not sure the market has been pricing in a 1 point already. And just on the possibility on the CPI report over here that we dropped, just the mentioning of the 1 point was actually scary, I guess, for the market, and that's why we had that much of a sell-off. So I really don't think it's been priced in yet, and we probably will see more to the downside if that happened. Perhaps, like I said, we'll break this white line that we have over here, which I probably should change this color to red because this is a key level that we need to watch for. I have it around 38, 35, kind of like try to be exact on here. And if we break that, then, the targets to the downsides are going to look something like this, about 37.90, perhaps even 37.80. And from there, we would have around 37.42. Now, if this breaks, obviously this is going to get really, really ugly. But, this is going to start triggering a lot of fear and a lot of sell-off, and probably like margin calls will start happening at this point if we break this level over here, where you would start seeing a spiral to the downside. Is that going to happen? Probably not. But if they do the 1 point, I mean, all odds are on the table. So again, just to look over here for the next couple of days until Wednesday, like I said, we're probably gonna try to take it, smaller levels, one level at a time over here. We thought that we were gonna have a broad information here in this area, but we ended up breaking below it. If we come back up over here, up until this point where you see this little trend line that got rejected 3 times actually and broke on the fourth, you might have a retest up in this area, maybe a little bit higher, but from there, I honestly would be concerned about being in a long position just until the FOMC decision is out. And to the downside, just again, if something happened and they come back and they break below this level over here, 38, 35, definitely would be a nice short, I would say, all the way down probably to 3,800 and from there down to 3,780. Uh, but again, I would repeat this again. Monday and Tuesday, I am not expecting huge moves. So if you're in a trade and you're in small percentage of profit, just secure your profit and run. Don't try to hold on to your trade, even if you see it going into your direction. You just cannot predict what the market would do. Like if some news comes out or anything like that, it could just flip to the other side real quick before you're even able to get out of the trade and you'll end up with a loss. Even if it doesn't move and it continues chopping, the chop is really not good for contracts, for trading options, especially if you trade weeklies. Or even, dailies in case of SPY and SPX, this destroys the premiums. And so I would be very, very, very careful with that. So, my bias is that we probably move up towards this area over here and wait for the FOMC. And, it's probably going to be like a slow journey to the top side. And if that happened over here, if the FOMC comes in at around 0.75, which is what the expected is, we probably will start seeing a move to the upside and we probably come back and test upwards of 4,000 at least. If it comes in at 1 point, then probably chances will come down and will break to this level over here, perhaps even down to 37.80. The next thing that we're going to be look at as usual is dollar index. And just like the opposite of securities or what happened with ES, we've seen this thing rip over here from this support area that we talked about in the previous video. And honestly, this would have been a nice long from this area over here. This was a result of the CPI report that was released. And so I think just because it created a large area of imbalance over here, we might see a retracement, perhaps, somewhere down to this area. At least I would say maybe like 38% to 50% of this move. Sorry, I used the wrong tool here. So we might see a pullback down towards 109, perhaps 108.97 area. Um, yeah, I would say 38 is around 109.27 all the way down to here, maybe even a little bit further. It wouldn't surprise me if I see a pullback, a retracement to this area. But from there, again, it's going to be pending the FOMC decision. And so this is kind of my bias of what I think would happen is probably we will just retrace a little bit over here, and depending on the decision, that would dictate what will happen next. We will either, if they end up raising by only 0.75%, I think we'll probably continue to the downside. And if they raise by probably 1% or 1 point, we'll probably see a move that will take these highs over here. And again, these highs we haven't seen since 2002. So it's remarkable to see the US dollar at this level over here. And so, crypto pretty much, a lot of the crypto traders actually look at the US dollar index because some people use crypto as a hedge. And so you probably see an inverse move on the side of crypto. If they actually end up raising the interest higher and this thing rips, you probably see a pretty solid sell or sell off in crypto, which recently we just had one actually with Ether. That was a pretty decent breakdown of a bear flag, and I will show it here in a second. But if I would say for the next 2 days, I think we probably will have a range in this area over here, and it's probably going to be a little bit choppy over here. Oil is going to be the chart that we're going to look at next. So last week we had an inverse head and shoulders formation over here, and it was a really nice clean setup actually. And I just put this alert over here at $90.40 and thought, okay, if we break above this, which more than likely will come up to test around $96. However, it failed and it did not break above this area, and it went back down to test this level over here. This is what's really nice about oil is that, you can actually chart it and, if, you follow your analysis, you'll do very well on it. I would say just follow the price action more than anything, and you'll be just fine with oil. So again, I'll probably think, if this level over here rejects and continue rejecting, we'll probably come back down and visit this $81 area. Uh, I'm thinking we might see some kind of a fake here to the upside. Probably come back and mitigate off of this area, and from there we'll probably see a breakdown and a drop to test at least this $82 level. But if it comes up and it continues, I would wait to take longs until we break above this $90.40 area. If that breaks, I think the potential to the upside is really nice on it. Um, there are three setups that I'm looking at over here for the sake of this video. The first one I'm going to go over is Airbnb. And as you can see here on Airbnb, I actually drew this little broadening formation. And this is basically, if you look at it over here, it's kind of, you know, making higher highs and lower lows over here. And that's what causes this broadening formation to happen. You to go with like two touches on either side. Probably need to clean up this a little bit better. Thought I had it right. But as you can see, you have your higher highs and your lower lows over here. So one way to trade these broadening formation is, you could probably just take the risk and say, okay, well, I will go long as soon as we open on Monday, as long as we don't break below 117.65, this level over here, basically breaking below this support line that you have. Chances are you'll probably move up to at least 120 to probably upwards of 124 area, maybe even a little bit higher, as a matter of fact. And but what you could end up with is that, as long, just give some time on these because you can see like a move to the upside and a retracement over here and then a move from this side. So I would say if, the best way to trade these is that to try to find some kind of a resistance once it starts forming that resistance. And once it comes back and breaks over that resistance, then you can take a long position and move to the upside upwards of, like I said, about 124, 125 area. That would be a really nice, decent trade if that happens. We're just going to have to wait and see if we actually form that kind of a resistance. The other way that you can take a look at it for a trade, like I said, is that try to take a long position from here, just wait, have your stop loss somewhere down here where if the price breaks below 117.65, then you stop your trade. As long as it doesn't, you just hold on to it and you probably just, start trimming upwards of 120 or so, and all the way upwards of 125 is a very possible move on this one. It could actually go higher, but I personally will not be holding any positions going into the FOMC. So this is going to be something that I would day trade. So if I jump into some position like this one, on the first move to the upside, 120, 122, I'll probably secure profit and run. Now, uh, to the downside, honestly, I don't see a whole lot coming, going to the downside. There's a whole lot of area of consolidation over here. And so, I will always be worried about it coming down here, mitigating, and just moving to the upside again. So give us like a little bit of a fake breakdown of this broadening formation. Um, the next stock that I have here on watch is Amazon. And with Amazon over here, excuse me, sorry, I just meant to change the drawing tool over here. with Amazon over here, as you guys can see, we have this kind of like fallen wedge formation happening. And to the upside, it actually has a really, really nice clean setup. I would absolutely um, would love to trade this if it breaks above this 126.44 area, especially if there was some volume coming in. Um, this can move all the way upwards of $130. And just because it being here like an area of interest, as you guys can see, the price rejected here several times. Actually, you had this one time, two times, three times. It's in the same zone pretty much over here when it came down on the CPI, tried to retest it, it couldn't, came back and retested, rejected. So, if we break above this area over here around one, again, 126.44, this is where I have my alerts in. I will be willing to go long on Amazon and, you know, probably trade it upwards of, I probably will trim as it goes up, maybe upwards of 128, 129. But you can leave a runner going upwards of $130. I wouldn't hold long past that point, especially with the FOMC coming up. If it was any other time, I would say might be worth a shot. The other option for it is if it doesn't rip right away, like we break above this area here, come back and retest, you'll have some kind of a support over here. You can go long and then put your stop loss below that support that it starts and you know, go upwards of 126 as kind of like your first target. And from there, you just can start trimming upwards, assuming it breaks. If it doesn't break, obviously it starts rejecting over here, you can exit. But we'll just have to see how Monday reacts. To the downside, honestly, I'm not sure this is going to just drop down again from here, which it could. I'm not saying that it cannot. It definitely can. I truly think we're going to test this area first and see if if it rejects from there and it comes back down, you know, then again, this area will be here, your stop loss above this resistance. Once it rejects, then you get some kind of a confirmation. And to the downside, I'll probably go 123 as first target at around 121 as the second target over here. I wouldn't try to go any further lower than this. Again, with the FOMC coming up, you hear me say that a lot, but truly this is a very, very important day. And take a look at Tesla here as the third setup for the day. We actually posted this on Twitter and on Friday actually as a day trade, we had this little resistance line over here, kind of like acted like a bull flag in a way. And this is what I'm looking for technically on Amazon, for the trade that I was just describing here a minute ago. And the break and hold above this area, you know, I said this would be the target over here at around 303. 90 area or so, and sure enough, it did come back and actually did hit it. Now, to the downside, I'll be watching Tesla for the break below the 295.67 area. I'm going to go ahead and actually place an alert on it here. And target to the downside will be first target at 292.29. The reason why I chose this target, as you guys can see over here previously, this price area actually did have some significance where price rejected from there as a support and we broke through it. We came back all the way down, came back rejected, like retested as a resistance, rejected from there, came back all the way down. So, just in case this thing, rejects in this area, I don't want to be on the wrong side of the trade. However, if it breaks it, I see us going to about 290 or 289 area over here to test this low over here. So to the upside, honestly, I mean, just if in case it rejected the high of Friday, like if we open lower, come back and break above it, there is a chance we can go a few bucks to the upside. That would be kind of like a setup that it would be traded to the upside. Like if it comes back down and breaks above this area over here, which is again the high of Friday, it would be nice to try to take it upwards of about $307 or so. I wouldn't try to go any higher than that because this zone over here has been kind of a rejection zone, as you guys can see here, here in August and in, well, the beginning of August, I should say, mid-August, over here towards the end of August. And so, the break of it is going to be big, obviously, if it happens, but if it doesn't and it rejects again, you know, we went down quite a bit from that area. So, um, like I said, I mean, if this thing breaks, I mean, rejects this area and breaks right above it, actually, I would be, yeah, I would say the high of day on Friday is going to be a decent, if we open lower and come back here at the high of Friday of 303.71, I would say that would be, I would say, a good entry point, and your exit point will be somewhere around 307, which is pretty decent move, for Tesla. Just be careful at around the $305. But I kind of like the setup more towards the downside if it happens, where if we, you know, you can try to see if we actually break outside of this area around the $300. There's actually also a good potential that you can come down about $5 down to 295. So we'll just have to wait and see. Basically, it's going to look something like this. Let's try to go ahead with my drawing. If we come back down here and we break below the $300, obviously $300 is kind of like a whole number, $5 increment, it's $100, solid 100. So a break below it could trigger somewhat of a sell-off, I would say. Uh, this will be the first target. If that breaks over here, then this will be the second target. So I kind of see that a lot more potential to the downside than I see to the upside. But again, I'm not going to discount anything. Again, with ES, with me kind of like thinking that this what's going to happen here, as I mentioned, we probably come back up here, this area, test this region up here, upwards of 390.60 or so. That could be translated into a move to the upside on Tesla, like I had explained, and same thing for Amazon, and hopefully it will help as well with Airbnb. I was going to talk a little bit about Ether. This is something that was actually mentioned in the group as well. Uh, we have, I mean, I really don't trade crypto, but just took a look at Ether over here last week. One of our members is big on crypto. Shout out Brad. Um, he said something about it. I'm not sure what they see in the wallets and whatnot. And he said there's probably going to be some big move. And I said, okay, well, this looks like a little bit of a bear flag over here. I would be definitely bearish on this one. And sure enough, this thing actually broke down from this bear flag and actually dropped quite a bit from there, about like even upwards of from that area. We dropped close to 14% or a little bit more than 14%. So that's a pretty decent move. As a matter of fact, over here we have a very solid support area that I would say we broke below it around 1357. And if we hold below this level, that's going to get really ugly, I would say, just from a technical analysis point of view. I think there will be more to the downside, somewhere probably down to about 1200 or even lower. So, uh, again, just remember with sell-offs, usually sell-off is feared by fear. And a lot of times when you see sell-off go in fast is because, there's going to be stop losses, which are basically live orders that get hit one after another. And so that kind of accelerates the sell-off a little bit. The other thing that you would see is that sometimes with sell-off, that was stocks or anything, you would have liquidations, people actually going in more than what they bite more than they could chew. They buy things on margin, and that causes margin calls like, hey, you don't have enough to cover if we go below this level, so we're going to go ahead and liquidate your position. So that's even more selling that feeds into the market. That's why sometimes with the sell-offs, you see the sell-off happen quicker and faster than when you see a stock move into the upside. Of course, if no catalyst was involved. If you're watching us for the first time, please consider signing, subscribing, and like this video. We are a part of a Discord group that we trade on every day, and we use several tools, including Traditex. to actually enter and exit the market. And we are having a special for the first month for free. And the link for the Discord will be in the description below. Join the Discord and you'll find the details there of how you sign up and get the first month for free. There will be no commitment. You can cancel at any time. We're confident with what we do, and if you don't like what you see, you can obviously cancel and call it a day. But if you do, we'd love to see you there. Thank you guys so much for watching. I really appreciate your time. And if you guys have any questions, feel free to DM me on Discord, or leave me a comment here on YouTube. Thank you.